If y'all create a money monopolizers bank, it's a real bank. Would you want your children going to Bank of America?
No.
Why?
Because we have access to it for, you ain't got to pay
Why
nothing.
would you go borrow from somebody else's bank when we have a bank?
Yeah.
Borrow from the family bank.
Right.
And pay the family bank back because long term it benefits the who?
Family.
You're listening to the Money Monopolizers podcast, helping you take control of your financial destiny. It's about time that we invest more in our financial literacy and work towards building generational wealth. If you think you're ready to do the same, then you've come to the right place. Alex, Marlon, y'all ready? Let's get this bread.
What's good, everybody? It's Alex Kamunya here. We are back with episode 108 of the Money Monopolizers podcast, and I am here with my co-host Marlon Walls. Marlon, how you doing today, bro?
I'm ecstatic, to say the least, man, because if anybody knew what happened the past couple of days, in order to still be here. Like, I'm not even going to get into that story. That's story for offline.
Yeah.
But just the fact that we are still here doing this interview today, I'm super excited for it. I mentioned that we got an interview coming up. This is going to be probably one of my favorite ones. If y'all see the background, we're traveling podcasters right now, man. I'm telling you, we got the whole setup.
Yeah.
Everything, all the mics, the cameras, the lighting. We're pretty much trying to stay consistent with this in the person interview process. So
yeah,
I'm excited for where we're going, to be honest. So I'm just, like I said, I'm ecstatic that we're doing another one today.
Yeah,
How about
man.
you?
I'm good. I'm happy to, again, we back out here. This 3 episodes in a row in Dallas. So it's like you said, traveling podcast it's a different type of game whenever you got to travel with the equipment and all this kind of stuff and get it set up. But I think, we got a nice setup today. If you're watching on YouTube, then you could definitely, see that. If you listen on audio, go watch on YouTube. But
highly recommend.
Yeah. But no, man. So we just happy to be here. We got a great interview for y'all today. But before we do get into that, obviously, business updates and everything. Before we do get into our interview. So Marlon, talk about kind of everything. Obviously now we pushing when this releases, will be the end of October.
Yep.
So that was the end of the first month of Q4. So obviously Q3 we got Q4 starting. How have things been for you just over recently?
One thing that I'm very glad about this interview that we got today is that we're going to be talking to a person that I've heard that pretty much shaped this thought process as far as the business.
Yeah.
Because back when he came in January, like to the morning meetup, he talked about slowing down to speed up. So he talked about how you're working in your business, like you hit a certain threshold to where you're making a certain amount of money, but then you start realizing that in order for you to scale beyond that, you have to slow down, get your right systems into place. You have to start setting up your SOPs. You have to get the right people in place, make sure that they understand what's going on. And during that time, you may take a short dump. You may take like a short hit to your actual business revenue.
Yeah.
But once you get past that piece and everything gets into place and people start figuring out how the system works, your business is going to skyrocket. So that was like my biggest takeaway from the beginning of this year, and now that's why I'm super excited to get into the episode today, because I want to talk to the people that actually told me about that. But that's where I'm at in the business right now, though. So that's kind of where we are. We're restructuring, and as far as knowing how to pursue acquiring new vehicles. So like I think I mentioned last time, we're looking to start doing more joint ventures within our business. Instead of us continuously acquiring cars ourselves, now we want to start partnering with other people, so that way we continue to expand our business, but more importantly, now we're able to bring other people along the way with us. We get to let them obtain passive income by joint venturing, but also we're able to let them gain the experience just by watching what we do. So now they can see how we run our business. Now they may be able to replicate that for themselves and be able to build wealth for their family. So that's really the purpose of like what I'm trying to do right now. And as we scale, we also need to start thinking about bringing in employees. So that's one thing I'm thinking about for like the end of Q4. It's going to be all about getting those systems in place to where we can begin to expand beginning in 2022. Yeah,
man. I think that's major too. You talk about slowing down for you to speed up. A lot of people, that's a harder concept to understand, because especially once you get into entrepreneurship, you think it's supposed to be go all the time. But setting up those systems and SOPs is, we've beat that dead horse plenty of times, so we're not going to keep talking about that. But we know how important that is just in terms of scaling the actual business, because we always say it's like, if your business can't operate without you, your business is worthless. So it's very important to be able to have that stuff, man. So.
Yes, sir. Now, what about you, man? How business going?
I mean, for me, it's been good. I think the goal for October is to do 50,000 a month, and I think obviously this episode is releasing before the end of October, but it's trending really well. So hopefully, the next time we record, we'll be able to say that we had hit that. But it's been booming, man. I think as I continue to scale it, the biggest thing is like the first location is the hardest one to establish.
That's when you're getting all your systems for
exactly
the first time.
Right. But once you establish that first one, the next one, it should be, a lot easier because now those things are already set up. It's just a duplication process. And then the third one, fourth one, fifth one, it's the exact same thing as the second one. So that's really where I'm at right now. Like I said, I'm trying to, make I hired an operations manager and trying to convert her to an full-time employee because, independent contractors versus employees, you get a different result. So that's definitely what I'm focused on for the rest of this year. But yeah, man, it's been good. I think just being able to do these updates and let the people know, because obviously, like we always say, this podcast is supposed to be a journey. We brought y'all to the journey for us to get to level 1 financial freedom whenever we hit that in September. Now we're taking y'all to the journey to get to level 2. Yep. And so that's why we wanted to restructure the podcast and show y'all, and still be able to do our interviews, but at the same time, a lot of people get value from these kinds of things in these mini segments that we could do and give people tidbits for how they should be how we operate our business and how they can take some of that and put it to their own. So but yeah, man, we got so many things going on. We can't even hit everything because obviously we got a show to run today. So yeah, we have a fantastic interview planned for y'all today. It is going to be absolutely amazing. Like you said, we're out here in Dallas, Texas, man, and there's so many heavy hitters out here. I say this every time we come out here. I mean, we interviewed Xavier out here last time. Xavier Miller, obviously, we all know what he's doing. Today, man, we got some very special guests on the podcast. Some brothers that are super important to the culture and to the community. We have Mr. Brother Ben X and Tayler Jacobs on the podcast today. So we're super excited to introduce y'all and have y'all on the show. Welcome.
Thank you for having us.
Yes, sir. As a matter of fact, I really want to start off by saying how this all happened, because we just so happened to come out to Dallas because we're having a Black Wealth weekend. And like I said, I knew when I saw on the flyer that Tayler Jacobs was going to be the person getting interviewed, I thought immediately January 8th. Yeah. I said, man, I want to be there so bad. I just want to see the impact that everybody is going to have in the crowd, because I'm telling you, January 8th in the morning meetup, we still talk about it to this day. That was single-handedly the best session that we ever had in the morning meetup. Mm-hmm. We talk about it almost all the time as far as the impact that he was able to have within the entire community. Everybody always refers back to that one, and that's because, just like I said, that slowing down and speed up, every entrepreneur experienced that at some point in their business, where they've been the main person in their business and they've been doing everything, wearing every hat in the business, but then all of a sudden they see a point where they can't continue to scale with just them. And that's really what he talked about within that within that day that he came to talk about in January 8th. But there's so much more that he has to offer. So, and it's the same thing with Brother Ben X. We so happened to meet him as well yesterday, and it's both of these are just powerhouse dudes all together. So I want both of y'all to just share y'all background and y'all story a little bit, just to kind of get into really how y'all met, because we're both being powerhouse dudes the way y'all are. It's y'all can both be here as separately and doing a whole interview for 2 hours. So kind of get into how y'all met and how y'all formed this partnership.
Well, we both was invited to speak at a conference called DreamCon, and I was speaking about, we ended up being on the panel just talking about the culture and the community and the environment that we were in, and people had topics that we was discussing, and how we really kind of started to gel was we were sitting next to each other on this panel. A guy got up and was basically saying that the Black community just need money. Hey, I got 100,000. Whoever needs it, they just need money. And in my perspective, no, we don't just need money. We've been traumatized. We've been beaten. We don't know our name, our culture, our God. So it's much more than just giving money, because money is going to just magnify who you really are already on the inside. And so after Jake's response to that, I found that, man, that was something that I would probably want to say, So I saw that he really had a heart for our people, and the way that he said it, what was showed me that this is somebody that I can work with after, Brother Amir was the one who actually kind of brought us together. He was telling Jake he need to meet me, and telling Jake he need to give me the book, because Amir knew me, years before from high school, and knowing me from high school and basketball and things of that nature. So once Jake brought me his book, We Are Sick, I actually read it. It's one of the few books I actually went through and kind of read the whole concept, because I like how he tied in like cancer to financial cancer. So it actually made sense financially. And then from there, I saw that he was teaching life insurance. He started to break down here at the office about why life insurance is important, how it can be beneficial to the community. And at that time, I was always partnering with people who had something to offer the community, because I had a large following. I was teaching people how to make money online, but a lot of people wanted to collaborate with me because I had, a following. And so I would always find people who had something to offer, a service, a product, a message, and I would get it out to the people. So after hearing what he had to offer, that's what I did. I came and filmed, pushed it out to my audience, made sure everybody knew about it, because it was something that I wasn't taught. I knew it was something that I didn't see anybody on Instagram, Facebook, or YouTube teaching about. So I pushed it out there. I initially came an affiliate, which is basically what I was doing for every company, Dr. Boyce Watkins, and anybody else who had a course or a program. I was just the affiliate. Yep. Because I didn't have time to, break down the program myself, or I didn't want to switch lanes. So I would just find somebody who had something that the audience needed. I had to follow, and then we just made it work that way. But I brought so many people in that they didn't know who it was coming from. People would just be on the phone saying, man, Brother Ben X sent me, or man, I came for Brother Ben X, so I'm only doing this because I heard Brother Ben X talked about it. So there was no way for the company to really keep track on how many people was coming in. So then Jake offered equity into the company. We started to build. He started to call me all the time to discuss things, and I didn't really have nobody at that time that called me, because I don't really like talking like that. But he would call for stuff that he could have just simply texted, but at the same time that helped build the relationship. So after he just continued to sit me down and teach me about certain things about the life insurance, how it can be used, we kind of developed that relationship and showed that what I had to offer with digital real estate or making money online was the perfect match with what he had. Because when I first came in, he was teaching about how you can make all this money, you put all this money in the account, you can put it out tax-free. But the first thing came to my mind was, what about our people who don't have money?
Right.
What about the people who ain't got $100,000? What about those who ain't got $25,000 to put it in there and really learn how to use it? So I thought, well, I can show people how to make the money. Y'all need somebody that can teach people how to make the money, how to grow. And now we're going to show them how to protect it, how to use it. As he says, turn the debt cash into asset cash. And that's how we came together and made the perfect match.
Man, that's special. So, now, first of all, I know you gave an edited version because you act like the y'all just gel well together from the very beginning. And I know I've heard him talk about it before. Like he talked about it, I think on the morning meetup as well. Because I know that connection just did not sit there at first. Yeah. I definitely want to get into all of that though, but I guess you can also give like your edited version of it, just because I want to for audience to hear.
For me, that was that side, but my side was when I first met Brother Ben. Everybody knows the white couch story, and the white couch story was he was sitting on the couch. Me and my wife sat down on the couch, and he got up, went to the mirror, checked his bow tie, and it was I joke all the time, it was a clip-on bow tie, so it wasn't like he was like making sure he was right. All he was doing was this.
Hey, nothing wrong with the clip.
I ain't got nothing against him. But I'm saying it'll take 9 times to go to the mirror. So you just kind of feel something. You don't know what it is. And I looked at AJ. I said, did that brother just get up because we sat down? And I was already irritated because we were in the green room. And in the green room, everybody high side, and then talking about you can Google me, and like they all like doing this whole thing. And so I was right. So I told AJ, let's get up, because I like to play games. I said, let's get up, go get us a drink, and then we're going to come back and sit down. But if he sit back down, we're going to sit a little closer. So she came back with the drink. AJ be irritated because I don't have to do this, but I just, it's just fun. So he sits back down, but so the L couch. So at first he was like sitting like this on the L couch. Now he like sitting like right here on the L couch.
In the corner.
Like not on the corner, but he right there on the corner. So me and AJ on the L couch, so we was all the way over there, so we then sat like right here. We sat down and he got back up. Went back to the mirror, moved his bow tie like this. I said, say brother, we don't bite. He say, good to know. And then kept his bow tie like that. And so at that moment I was immediately intrigued. And now that I think about it subconsciously, Seven, who's a CEO of our media company, he mentioned Brother Ben X when I sat down with Seven and did an interview with Seven that never went out. Because we silly sat there for 3 hours, and like, you know, Amir ended up telling me to meet with Brother Ben, but there were like a couple of, I've heard of his name, and maybe like once or twice before. You don't think about it until like later on. You're like, well, I did get a little earway from there. And so we sat down, and at that moment, I was just intrigued by him because, you know, he didn't want us to be kind of close to him. You could tell he was already irritated in the room too as well. Everybody kind of talking a high side, and he just sitting there. Y'all know Brother Ben.
Yes.
He's an introvert extrovert. When he's teaching, he in his bag. He just him and the camera. He can go 9 hours straight. But if he around people, he ain't fooling with it. And so in this room with all this madness kind of going on, he would just sitting there in his own space, and I just found it intriguing. So then I just started messing with him. And then we ended up talking about basketball. Like, what did you play sports? And then when I talked about basketball, his eyes kind of lit up, and then we kind of stayed there. And after that, we was on a panel. We vibed on a panel. But that was it. Like, I was going to be like, you know, cool. I think we exchanged contacts, and one of the people on our media team now, Ashley, I think she captured our very first picture together. Wow. Which is pretty crazy. And so that's kind of, you know, from that point on. And then it got to the point again, like he said, his value to the company, because I wasn't online at all, like that. I had like 2,000, 3,000 followers on Instagram, February 2020. So, you know, it didn't grow that much from October 2019 that I met him. Yeah. And then he just flooded the gates with leads and interested people who are interested. And we kind of just, I would guess say by happenstance, started our academy, started, you know, kind of teaching together because we was already vibing together. And then from that point on, it was, you know, I had to get equity. Like, yo, at this point,
because how much value he's adding.
Yeah.
And I think that's the way y'all formed the partnership. Well, I think that's a whole lesson, just in the sense of like when people are looking to form partners, right? Because I think a big thing that happens is, even just in a lot of the things we talk about and a lot of things we see a lot of things in real estate and in business, and typically what happens is most people, they just try to they don't necessarily look where someone fills in their deficiencies in terms of when they're looking for a partner or looking to partner with someone. They're just looking to see, how does this person benefit me in any way that they can, right? And so for example, like a lot of times when people want to get into real estate, they say they don't have any money. Cool. You don't necessarily need to have money. Well, you need money to get in real estate. It doesn't need to be your money to get into real estate, right? And so typically what happens is there's so many opportunities to partner with people that, you know, they might have, you know, money, and you have hustle and knowledge, right? So you can, that's an equal exchange of value possibly for that other person, right? And so that's what I can see too, just in y'all's relationship and y'all's partnership as well. Obviously, you know, Brother Ben was, you know, able to, like he said, show people how to make money, and you had the perspective of showing people how to actually preserve that money, right? And create a legacy and create wealth through that. So I think that organic partner, I mean, I don't know if you would call that organic just with the interaction, but you know, I think that the way that partnership actually began and the way it looks is super. It's just like a perfect fit.
Yeah, and I will be honest to say, I don't think he and I knew that we needed each other like that. Yeah. In that way, Ben was already making 6 figures a year. You know, with our financial firm, we're producing 7 figures a year, netting $450,000 to $600,000.
Wait, what was the first thing y'all did together?
The
financial firm.
Yeah, because I already had the financial firm offering a new way of thinking about banking. Gotcha. And Brother Ben, I was actually teaching him because I just wanted him to be a client. And Brother Ben can attest. I actually told him I didn't want to be on his page. I didn't want to be on his social media. And I actually challenged them when we started kind of working together. Cause you can buy followers and views and stuff like that. and he posted it online, and I was like, you know, I was in my phase like, if you are who you say you are, it should be easy for you to prove it.
Yeah.
And Ben ain't never backed down from no challenge, and so he didn't only just prove it, he shut everything down.
Yeah.
And so I would be remiss to say I was actively, the reason why I even started getting and wanting to get on panels and teaching at that time. I told our who's now our co-CEOs of our financial firm, Adelage and Chandelin, we were doing direct mail for our leads, and things were slowing down, things were changing. I didn't want to keep going to houses and closing deals in houses, and people's houses nasty. You know, you sending your women agents to houses by themselves. You know, you just never know people nowadays. And just, you know, prior to COVID popping off, and I knew that we needed to get on social media. I just didn't know who, where, or what, and I didn't know that the solution to us getting on social media was the God of social media. So it was pretty cool.
Yeah, but I want to hit on that exact thing because both of y'all, like I said, are like powerhouses in your own respective spaces.
Yeah.
What y'all saw is that y'all could, by collaborating together, y'all could just like expound on everything, and like y'all could explode together rather than going your separate ways and doing it, each thing individually. So I want to talk about like so for Brother Ben X, he's big on digital real estate, right? And I want to really first of all explain what that is, and also I want to just, for one, highlight to everybody that's listening, if y'all go see Brother Ben X's Instagram, this is one of his social media platforms. 36,000 posts on Instagram alone. On Instagram
On one
alone.
page.
Like
still do
90% of them is him posting.
right. So when he says the God of social media, this is why he's saying that. So I want you to explain what is digital real estate, and like explain like your philosophy behind how that came about.
We came up with it one day while doing the podcast, and we came up with the name Digital Real Estate because around this time people was telling me, well, a little bit before I met Jake, about credit, and you got to borrow money from the bank, and real estate is how a lot of people get wealthy. So you know, there was this narrative, 100 doors or so many doors, and this is how you bring your money in. So you get you a mortgage or you borrow money from the bank. You charge the person rent or whatever the case may be a little bit higher than what your mortgage is, and this is how you get your money on the top. So you try to get, you know, enough doors to where you can get you some positive income to where they're paying the mortgage for you per se. I was getting into wholesaling at that time as well, but it was just too much for me. So getting into the real estate lane, I personally don't like paperwork. I mean, if you wrote me a check today, it may take me a week or two to actually cash it. I don't like lines or anything like that, you know. So for me, I said, well, I got over 2,000 properties, and if the concept is get you some physical real estate so that you can get residual income, well, I'm doing the same thing with digital real estate. Every video that I make is a property. Every product, every service that I make is a property if I'm getting paid residually from it. And this one video can make $2,000, $5,000, $10,000. That's more money than what you just made on your physical property.
Right.
So why am I going to spend all this time doing something I don't really like to do to build up a physical home when all I got to do is get eyeballs and I can get paid residually? And if I get somebody to get into this physical home, I can no longer promote it on Zillow. I can no longer promote it on Facebook Marketplace because the family already consume it. But my digital product or my intellectual property, if somebody comes in and buy it, I can still promote it to other families. I can get 10,000 people to live on my property. So that's how the digital real estate came about, and the whole concept behind it. Like even wholesaling, right? Wholesaling is you go find a distressed home, right? Now I got to go find a motivated buyer, or I got a motivated seller. Then I got to go find my investor. All I'm gonna get paid on is the assignment fee. I'm flipping the contract. Well, that's the same thing drop shipping is. I'm gonna go find a product that's low, that's cheap. I can probably get it from the manufacturer. Go find a buyer, which we can just say here's the investor. Once you buy once you buy from me, all I'm gonna do is pay for the product from, let's say, Alibaba, China. They're going to ship it directly to you. That's digital wholesaling. You know, I'm getting paid as the middleman on the inside. So instead of me spending 6 months to build out a physical property, it takes me 6 minutes to build a digital property and put it out there online, and now I'm getting paid residual income. Also, they talk about group economics. Hey man, you put up 5, you put up 5, we all put up 5, let's go get a property, let's build up, let's renovate it, right? And then we're gonna rent it out. Well, we did the same thing with a platform called Men's Viewpoint. 4 of us got together. We didn't put up money per se, we put up time and effort, build up our homes together on our phones, and then after we eventually built it up, right, we renovated it, built it up, made it of value, we got paid $67,000 in 1 month on Facebook alone. So, and we didn't have to be on the camera per se. We learned how to curate the content from other people's content. So that's the concept of digital real estate, and when I break it down like that, is very easy to understand, because the whole concept is value, not selling, but value. So the way that you sell a physical property, you want to say, man, I got these got granite countertops, or this one got a pool in it. Well, why are you saying this when you're advertising? You're showing people how valuable that home is. Hey man, this is upstairs and downstairs. You got 3 garages that you can put in here. So whenever you're advertising, you're only talking about the value of the home. Well, inside of your course or on your social media platforms, that's the same thing that you should be advertising, not the price. None of y'all, if y'all had a property, will probably just be like, hey, I got a property for $59,000 or $150,000 or $450,000. Y'all would be like, they would be asking y'all like, what's in it? Like, you know, is it 1 bedroom? Like, where is it? Where's it located? What's around it? Right. So when you're doing that on your social media platform, don't just say $19.99. Don't just say $19.97. Talk about the value that you have, and that will attract you. So when I put them in that type of mindset, it leads them to my quote: focus on passive impact versus passive income, because the more people you impact, the more income will come. So that's how the whole digital real estate thing came about.
Man, them analogies is crazy. But I love that the way you do make that synergize though, because I was just thinking of it too, just in the sense of like in physical real estate, you look to build equity in the property, right? And you build equity in your property by adding value and doing those kinds of things. And I can see that in the same way you're presenting the whole concept of digital real estate too, because the more value you add, the more brand equity you build, right? And so your brand becomes more valuable just by the value that you add, right? In the same way, if I add value to my property, it gains more equity, right? And so I absolutely love that too, because what I see it happening is like and just with the amount of content you put out too, it's like there's no way you don't stay top of mind for people. So it's like anytime if you have an offer, and anytime someone need something that relates to your offer, you're the first person that they're gonna be thinking of. You occupy their mind share at least 90% of the time for that particular thing. And so I think that's just amazing. Like, people got to really listen to that and take that, like, digest that.
And I want people to really sit on the equity piece that you're talking about, because one of the things that we teach in digital real estate, we had a young man by the name of 11 Hertz. And what he did was he would buy somebody's page for the low, and then resell the page to somebody else for more money, making the money arbitrage in between, or what he talked about, the assignment fee, almost like wholesaling, building a deal. But imagine getting a page that already has a lot of attraction for the low, and then you build your properties on that page with videos, bringing up the value, and then selling it for a higher price. And it's almost like Daquan, Brother Ben talks about Daquan, how he sold it for $80 million.
$80 million?
$80 million, and it wasn't a black guy.
I've heard that.
It was a white person
that bought it.
No, the white person who built it
was
up.
building it up.
Oh.
Yeah, he just called it Daquan, and
really?
and they just built up the page.
Because you never saw his actual person's face or anything. You just saw the little API picture.
And so when we think about that, that's why it's very important for us to be able to realize when we talk about money, the Brother Ben's course used to be called I Am Money, and it was signifying that we are the currency. And for a long time, Ben and I always talked about currency comes to the person who has value, right? And so it doesn't matter what the currency is of the day, if they still got to pay whatever the currency is to get the value in exchange, right? And so the key is in building up these digital real estate properties or websites or whatever, just continue to bring value to the marketplace, and the currency will follow. As your brand continues to grow and expand, now you can start thinking about exit strategies, selling your company, going public, licensing, or doing whatever, because the brand begins to be bigger or larger than life. Does that make sense? And so the online world actually is the great equalizer for all of us to build true wealth, because there are only a finite amount of land and properties and buildings that you can purchase, but there's infinite opportunities that you can have online and continue to build and grow your brand.
Yeah, that's real strong right there, man. And one thing I love about like just the digital real estate aspect is that like his philosophy was that our people may not have opportunity, may not have the money already. So now this is a way to be in the face of people, which is going to attract. If you're adding value to them, that's going to bring in the currency. Yeah. So that's allowing people to be able to find a way to make money where they first didn't have any. Yeah. Because that's usually people's first problem. Like Alex mentioned earlier, I don't have the money to get into real estate. They don't have money to get started in the business. They're always looking for how do I get money in general. So now you have answered that question. What I like about y'all partnership is that you answered two questions. How do I obtain money? And then how do I build long-term wealth with that money? Yeah. And so now I know a concept that you talk about a lot is buying your wealth. So I really want to start getting into that topic of conversation as far as like taking the money that we make through digital real estate and now how can we park it into like a long-term asset or a long-term wealth building strategy.
Okay, can one of y'all bring my the two, just private banking, we are sick. Thank you. It starts with this book right here, We Are Sick, Surviving Financial Cancer. In this book, I scientifically and statistically prove how consumer debt is the #1 cause of death in Black America.
Really?
And if you look according to the CDC, the #1 cause of death is heart disease, okay? The #1 cause of heart disease is acute and chronic stress. The chronic stress is stress over a long period of time, typically over the same thing. The #1 cause of acute and chronic stress is what we call financial hopelessness, the feeling that you can't get out your financial situation. And the reason of financial hopelessness is debt. You know, you're waking up, to serve one master. It's not God. It's whoever owns MasterCard, because that's the one who owns, who's the master of your cards. And you don't think about adding value. You're thinking about paying that mortgage. Right. You're thinking about paying that car note. You're thinking about paying that debt bill. You find yourself taking jobs and opportunities, and just to pay a debt, just because you wanted that lifestyle, right? And so in this book, I statistically and scientifically prove that. And then in this book, Private Banking Blueprint, we teach people how to be their own bank. This is a textbook. And so when I talk about buying your wealth, that's only one facet to actual true wealth building. So if you understand true economics, you understand the true build of what companies end up becoming. Companies actually become the bank. When they go public, they're taking other people's money in exchange for equity in most accounts. So you're not even having to give any distribution back. And they're ciphering other people's money so they can invest in other places and grow it, building their own banking system. When you look at Warren Buffett, his fund is nothing but a bank. He's taking other people's money as a hedge fund, or he's a public company, other people's money. They're buying his share, and then he's taking their money to go invest into stable companies and then paying dividends back to his contributors or people that have partnered with him. So a lot of us don't realize that when it comes to our economic wealth, we don't realize that there are 3 teams. And the first team is the consumer. That's the person who's always consuming all of the risk from society. I'm consuming the risk from the bank. The bank says, borrow money from me so that you can buy something from the producer. Who's the producer? That's the owner. That's the business owner. That's the real estate developer. That's the entrepreneur. That's the investor. So I'm borrowing money from the bank just to purchase something from the business owner. The business owner gets taught by the bank what? Borrow from me. So you borrow money from the bank just so that you can create a product or sell it to the consumer. And the business owner, typically, they pass on the cost and fees to the consumer to pay. So they're able to have higher arbitrage, which is profit in between. So the consumer is consuming debt and fees from the bank and consuming debt and fees from the producer, putting you in the worst position to be.
And then the producer is also in a pickle because it's okay leveraging money. It's okay leveraging opportunities if you understand what leverage is. Leverage by definition means to maximize something to its best or greatest benefit. So if I'm not using it in its proper term, it can end up hurting me. So when people talk about debt, there's good debt and bad debt. That's a lie. That's like saying there's good gun and a bad gun. Is there such thing as a good gun and a bad gun? They both are created to destroy. But it's how I leverage it that will allow for me to either be in a place of power or position, or it can be a place of protection to just make sure I'm good. So when I talk about debt, you only use a gun when you need it. You absolutely need it. Like you're protecting your family. You went through every other option. You've literally went through the steps. Like, okay, I don't want to shoot you. Hey, can you put that down? Excuse me. And then as the last option, you're pulling out the gun. Why? Because the gun's intention when you create it is to kill. That's the primary purpose of a gun. It's to destroy. So when I talk about leveraging debt, going to a bank, that should be your last option that you go through in the process of building your wealth, because it's just like that gun. It can destroy you faster than you can imagine. And so when we're looking at this dichotomy or this space that we're in, there's only one team that wins on both sides. It's the bank. The bank has convinced you to borrow from them. The bank has convinced the producer to borrow from them, and only for the consumer and the producer to always have to pay who back first? Daddy. Daddy, you got to pay daddy back. And so what we teach in Private Banking Blueprint is for you to learn how to be the bank. And I know there's a lot of people who leverage money from the banks. They leverage things of that nature. And so we're about to start playing with a concept called the hybrid banker that's transitioning the producer to becoming the bank. But there's like a middle game that you can play so that you can be able to properly set yourself up to leverage a bank for the overall good. But the goal is to not need the bank moving forward. But we get into a dependency where we now need the banking institution, and now we want to stay where we're comfortable. It's almost like, Massa get you a good house, a good car, a good little woman, and give you your own little land, but you're still owned by Massa, but you think that you're different than everybody else that's a slave, but you still a slave. You just got a different prison. It looks better, but you still in prison. And so the goal is to teach our people with private banking, understanding what these things are and knowing. See, if I know my enemy, I know how to maneuver. I know how to move if I know what this thing is. And so I'm not using the bank as a crutch, but I'm using it as a last option. And a lot of us go to the last option first, and we're wondering why we mad at the police. Why? Because they go to their gun first to kill us.
That's good.
And then you're mad at the police for making that their first option. But yet we're teaching financial education to our people to make the bank and getting in debt our first option. It's the same genocide. It's the same homicide. It's the same destruction. If I don't teach our people how to be able to get funding directly from the customer. Think about where the bank get their money.
Right.
The bank get their money directly from the same person you trying to sell to. Where? The consumer. In that neighborhood that you living in. They go directly to the consumer, but tell you got to go through them. The bank ain't nothing but a third party that houses and secures finances. The problem that we have is education to know how can I get my product in front of other people. And it's literally right in front of us. When these companies IPO, right? And they got a prototype. All they do is create a prototype, like Elon Musk did with that Cybertruck that he said was indestructible and it cracked. Right? You take that model and you just literally take that model, and what do? Be the bank. What do? You get other people to buy, pre-buy that car that's not even created yet. Now you use that money to actually go make the car. You take that money, give them their product, you keep the money in between. Ain't that what the bank do? Ain't that what the bank do?
That's it, man.
It's the same exact thing. So our order of building wealth is absolutely backwards. How we look at building wealth is absolutely backwards. And the fact that building wealth, we add leveraging and needing the bank as far as your building wealth process, that's absolutely ridiculous. You don't need the bank, just like you don't need a gun. Right? If you learn defensive mechanisms that can protect you, you wouldn't need a gun. But a gun is something safe to have if you don't have those other metrics, or if those metrics don't work. You still got to know how to use a gun if somebody has a gun on you. So to be able to defend yourself against them and put them down. So you got to learn how to leverage it. So the reason why I love leveraging insurance is because when you borrow money out the policy, you are borrowing from the insurance company. But it's in a much more micro-controlled world that you can control, that they don't control. So I can borrow money out my policy, get guaranteed 4 to 8% on my money like I never touched it, and still have access to their money.
Yeah.
But I cannot leverage more than what I have in there. So it's teaching me proper leveraging metrics, proper leveraging responsibilities. So if I ever had to go and leverage the bank, I know exactly how to put myself in the best position to win.
Yeah, man. Hey, orders up. Orders up.
Preaching, I told you.
Because this is so crazy. Because like this whole concept of private banking, becoming your own bank, this is something that a lot of wealthy people have been doing for years, many centuries.
Yep, I didn't create the concept. I just put some color on it.
I mean, it's just crazy because I was actually just, it's funny. I just learned about this concept like literally a week or two ago.
Yeah.
And it's literally been consuming me so much just because it's crazy because the fact of the matter to me, because obviously I think you're talking about whole life insurance, correct? So
dividend paying whole life insurance, they all aren't the same. It's kind of like everybody got a barber license, but everybody can't cut.
Facts. So because whenever I started researching and I was looking into it, so for the people that's listening, so essentially the whole concept is you start up a whole life insurance policy, right? And so you're able to pretty much put money into the policy every single month, and you pay a certain amount to the premiums, which is an insurance expense, and then the rest goes towards your actual cash value that you build up. And then eventually it builds up to a point where now you are able to, I mean, you could borrow from it immediately if you wanted, but obviously you want to build it up to a certain point where you can, like, now you have a substantial amount of money that you can borrow against, right? And so that's what you were referring to in terms of, like, you now become your own bank. Now, you don't have to go to another private institution to be able to, borrow money from them. So now, if I'm paying interest, I'm paying it back to myself. Right. I don't have to pay it to the bank anymore. Right. Is that pretty much like the concept of it?
So the biggest concept, and we're just gonna have the AC on to knock it off a little bit, and we're good.
Yeah,
So when it comes to that concept, the answer is yes. Short term is yes.
Yeah.
But the goal is understanding what an asset is. See, money in itself, currency. If you break down what currency is, currency. If you break down, you look at the pronoun. I mean, you look at the root word, and you look at what cur means. Cur means to run. NC means consistently. So that means our money is supposed to be moving what? Consistently. Well, if money or water ever gets stuck in a reservoir or in this like ditch area, typically what happens is if you don't use it, you lose it. It evaporates and goes to an area that needs it most. So knowing that I have to make my money move consistently, I got to understand what currency is. When we get the money, all of us understand that inflation kills the dollar, right? And so if my money is dying every single day or every single month or every single year, that is debt cash. Debt cash is something that has no intrinsic value. It's dying in itself. I got to turn my debt cash into asset cash. Yeah. And so asset cash is money that is growing money on top of it. No different than real estate, right? I put my money into real estate with the understanding that I want what? Reoccurring income. I want the equity on my investment to continue to increase.
Even after you borrowed against
even after I am borrowed, right? Yeah. And so with real estate, I put $10,000 into my real estate property. It produces me 3 to 6% every single year in growth, right? 3 to 6% every single year.
Yep.
If you look at the what you call it?
Appreciation.
Appreciation.
Yep.
And then plus cash flow on top of it that you get in between, right? So if I'm looking at that and I put that $10,000 in a real estate property, the question is, can you access any of that $10,000 when you put it in a real estate property outside of refinancing? No. Well, in insurance, I can put $10,000 into a policy and get access to 60 to 80% of my money in 30 days, and still have, if depending on your age, $500,000 to $1 million in death benefit.
Yeah.
So it's like having a house. I put $10,000 on a property. That house ain't gonna be no $1 million house.
No.
That house is probably gonna be around what? $150,000.
Yeah.
Give or take, and it's financed. So I put $10,000 down on a financed property. That's $150,000. I die tomorrow. First of all, I couldn't get access to the capital. that I put in. If I die tomorrow, my family will get $150,000 minus whatever I owe the bank, minus probate.
Yeah.
So you may get your $10,000 back there.
Yeah.
Right? And so, but in my policy, I can put $10,000 in a policy, have a $500,000 death benefit. I can pull $6,000 to $8,000 out, go make an investment somewhere. I can die. My family gets a $500,000 minus the $6,000 that I pulled out.
Yeah.
Plus, we still got that asset that I purchased over there. What am I losing?
So, matter of fact, no, I wonder, because people do have questions about that. Like, one thing I wonder about is when you pull out your money from your insurance policy, it's going to be a time, like, usually, like, when you borrow any type of money, there's usually some type of interest rate attached to it.
Sir.
So how does that work in this case?
That's a great question. And this is where banking comes. It's called arbitrage, right? So actually, when you're borrowing against your policy, you don't pull out your account.
Okay.
Yeah, it's a lien that gets put on your account. So
Okay.
It's
if
against, not on.
Against, not on.
Yeah.
So if I got $10,000 in my account and I want to borrow $6,000, they don't take the $6,000 out your account. They just put a lien on $6,000.
Yeah.
But that full $10,000 is making 4 to 8% still.
It continues to appreciate.
It continues to appreciate. They give me money from their account.
Yeah.
At what's called 5% simple interest.
Yeah.
So they're still paying you guarantee 4, right? Let's just start with the guarantees. You get a guarantee 4.
Right.
They're charging you 5% simple interest annually. So 5 minus 4 is what? 1. You're getting access to their money for 1%.
Yeah.
Your account's still getting dividends though.
The guarantee.
The guarantee plus the dividends.
Yeah.
Right.
So
That's why I said the dividend
if you
paying.
have the dividend, it's got to be a dividend paying. Because if they give you guaranteed 4% and you get total 8%, you still making 4 minus 3% on your money while you're leveraging their money to go make a play. And the game is not to go make a play on consumer things. Yeah, that's why we're sick. You got to go make a play on things that can bring you more money. Because guess what? They don't charge you interest until the end of the year. December 31st. So if you put the money back December 29th.
No interest.
You got the 4 to 8%. You use their money for a full year. Use their money for a full year. You done made arbitrage in your profits. You got to use their money, make 4 to 8%. And then when December 31st, all it takes is a week to reset. You can pull the money right back out, start the process all over again. But see, if you don't understand banking, you don't understand control.
Yeah.
Banking is literally financial control.
Yeah.
That's all it is. When you look at a banking institution, a bank ain't nothing but a big business. And their service is securing and controlling our money because we don't know how to take care of ourselves. That's it. And so you use the bank for what you need it for. Easy access, easy charge, easy this, surplus cash, you put in policies. This is why infinite banking is the actual, the name of what this is. By a guy by the name of Nelson Nash. He's the creator of it, okay? And I always like to give where it originally came from so that people can understand when they look at ours, it's so much added on top of it because his was this thin and it's straight black and white.
Yeah.
And if you ain't in the industry, you don't know what you're looking at. And if you're in the industry, you don't know what you're looking at. So it was made specifically from an entrepreneurial's mindset.
Yeah.
And because when you think about banking, right, you got to have some type of entrepreneurial mindset because when you pulling that money out, you should be putting it into something that can make you money, grow you equity, or long-term investments. So, the play we did was if you wanted to invest, I can put the money in a policy, take the $10,000 out, put it into an index growth fund. If you don't like to actually trade yourself, index growth fund, the growth fund can, let's say that year, do 12%. You can then take the 12%, put your money back into the policy, whatever your principal was. That money goes back into your bank. You done made 12%. You keep 12% inside your index fund. You keep the money. And there's so many ways you can play with this.
Yeah, man. This is crazy because essentially what I'm hearing is there's no lost opportunity cost when you do this, right? Because typically it's like if with this whole concept of because you mentioned control, and I think that's a super important concept here because what I see it as is for instance if I had $30,000 right and my plan with this $30,000 was to buy an asset right, let's say I wanted to buy a rental property whatever, instead of taking the $30,000 and going in straight what you call debt cash going to finance this rental property, I can take that, run it through the policy and just borrow it immediately. So it's not even that I'm just like, keeping the money in there. I'm putting it, it's essentially a cycle. All my money gets run
your
through
money.
Exactly.
Right. Cleaning your brain.
Exactly. I'm running everything.
Because you got to think of debt cash is like dirty money.
Oh,
You can't just move dirty money like that.
Yeah.
Dead cash is dirty money.
Yeah.
So I mean, let's keep it, where a lot of our people come from, right? I gotta clean dirty money. It gotta get, and guess what? Cleaning the money comes with a fee.
Yeah.
You're gonna lose a little bit of liquidity
The insurance expenses.
which is the insurance expenses.
Premiums.
The premium, right? So people say, I want to use my money to buy asset. The easiest asset to buy is something that gives you guarantees.
Yeah.
So I'm going to take my cash and I'm going to put it in a policy. I'm cleaning my money. Now I got my money in there. I got 30,000. Some people say, well, Jake, I got 30,000. But what if I only got access to 60 to 80% of my 30,000? Yes, you bought an asset. And some of that fee, that cost up front, is building that asset up to make sure that you have guaranteed death benefits. So now my same $130,000, I got access to 20,000 liquid. Now I got 300. Let's say now I got $400,000 of death benefit.
Yeah.
And it's gaining 4 to 8% every single year.
On the same 30,000.
On the same 30,000.
As if you never touched it.
As if I never touched it. Then I could take the 20,000 if you wanted to leverage the bank. I could take the 20,000 out. Now I'm gonna go play with the bank.
Yeah.
Put 20,000 down on the bank. Yeah. Now the bank, I take whatever the promissory note with the bank. They're gonna put a mortgage on your property. Then you can play that game, and then you can allow for the arbitrage profit that you make to actually pay back into your policy. Mm-hmm. So now that money is paying itself back from the actual renter renting inside the property. Now you're hybriding banking. You're using their bank to help you build your bank. And then when you don't need their bank anymore, you cut them off. Let me ask you a question, brother. If you actually owned a bank, if y'all created Money Monopolizers Bank, it's a real bank. Would you want your children going to Bank of America?
No.
Why?
Because we have access to it for... You ain't got to pay.
Why would you go borrow from somebody else's bank when we have a bank?
Yeah.
Borrow from the family bank.
Right.
And pay the family bank back because long term it benefits the who?
Family.
So if I don't have that same concept now, how could I ever put myself into the position of actually being a person or place of authority?
Yeah.
And the best part about it is the last part is the actual business. If you are not a family, if your family doesn't have a family LLC.
You talking about like a family office?
No, I'm talking about a family, like
Okay.
the Johnson family. If it's you, your wife, your cousin, your mama,
Yeah.
y'all should have a family LLC. Because it's not legal until you have an LLC.
Yeah.
No different than your birth certificate. You ain't legal technically in America until you have your what? Birth certificate. It's a corporation. It's a birth of who you are as an entity. So my family should, one, have an LLC. Then what happens is I can now take out a policy on myself. The business can write it off 100%. So now this is the other game. You ready? If I got $30,000, you own a real estate business, right? And you're actively building in that business. I can take the $30,000, I can put it into the policy. I can write off the full $30,000 because it's a business expense.
Yeah.
Taking out a policy on its primary key person.
Yeah.
Now I write off the full $30,000 off the book, so I don't have to pay profit on that because it was an expense.
Yeah.
That money goes into your policy, but you got access to 20,000 of the 30,000 plus the death benefit plus the 4 to 8%. Then I can take that money that's supposed to be an expense. I got access to 20,000 of that money that just got expensed off, and it's a legal write-off, and it's been done all the time. All the big companies do it every single day.
Man, and that's the game, man. Like the banks, the corporations, all of them use life insurance.
Yep.
And so it's like, why would we not do it?
Yep. Everything in life that has some type of value to it has insurance to it.
Yeah.
So if you don't value your asset or your cash, you ain't gonna have insurance on it.
Yeah.
And so when me and Brother Ben, when he heard that, that's when he made me get on digital real estate.
Yeah.
And then
No, I'm laughing at it now because I understand like this is a brand new concept to most of our people.
Mm-hmm.
Like we don't really necessarily ever hear this
Yes,
growing
sir.
up. Like you said, it's been happening for centuries.
Yep.
People like the big businesses have been doing this. It's nothing new.
Yep.
But our people may not understand it. So that's why I really like y'all partnership again because one thing that both y'all understood very well was what y'all knew, what y'all did very well, what y'all gifts were essentially. So now Brother Ben knew that he was like he has the audience. He knows how to continue to cultivate his audience. Knows how to engage with them. Knows how to continue to put out content. You, on the other hand, you know about how to pretty much become your own bank. You know your field of expertise, and you know how to articulate it in a way to make people understand it. And so now y'all come together. because he may not understand life insurance as well as you do, but if y'all partner together, y'all can, like I said, take the wealth that you're building through digital real estate, take the money you're building through digital real estate, put it into life insurance policies, be able to grow and build long-term wealth as if you are one of those big businesses, and then that's what creates long-term wealth for the family overall. I love the concept, man.
So real quick, can we show the book too?
Yeah, I want to show that book too, because I need to copy that myself.
I just ordered the book. I had the What the Rockefellers Would Do, and then the other Nash book.
It ain't no textbook like this.
And that's why I was like, yo, this need to be the blueprint. Where can people get that book? By the way,
you can actually go to pbbfamily.com. pbbfamily.com, and for $47 a month, you actually get access to our community and access to the course for free.
Okay.
It's over 30-something lessons, over 20-some lessons, 30-plus hours actually teaching you the construct of family banking, private banking, and then you can actually purchase the textbook, because it goes with the course. Purchase the textbook when you get into the community. So for $47 a month, you can actually add on the actual book and purchase the book.
Okay, got you, man. Y'all got to check that out. PBB. You said PBBFamily.com. Man, that's a game changer. I'm definitely gonna go cop that book because I was reading the.
I'm trying to leave out of here with one of them. I can't walk out the door without it.
Shoot,
hey, y'all here, so y'all might as well go on, come to the headquarters.
Hey, yeah, for sure.
Yeah, so that that's it.
Yeah, man. Marlon, go ahead.
So now I want to just wrap it up with the fast five for the sake of time. But for one, we could probably do 3-4 episodes with just y'all because there's so much that we even get into today.
Yeah,
and like I know that for one. Bisco that you have going on, man, there's just so much that I would love to cover, but for the sake of time, I do want to wrap it up with our last segment of the day, which is the Fast Five.
For sure. So, first question, what does success mean to each of y'all? Y'all can answer individually.
Success means to me, it depends on, I guess, the focus. But success means to me being able to do what I love to do without having to worry about making money to do it. I want to, being in that place to where you don't have to do a call to action to add value. That's success to me.
Success to me is accomplishing the goals you have without compromising your principles or God.
Love it.
That's good, man. All right, question number 2. What is your favorite money or business book?
My favorite money and business book is We Are Sick, Survival Financial Cancer and Private Banking Blueprint. That's mine.
Of course.
Mine will probably be Think and Grow Rich.
That's good.
Think and Grow Rich. Shout out.
Napoleon Hill, right?
Yeah, Napoleon Hill. Third question. Would you rather have $1,000 a week for life or $1 million today, and why?
$1 million today, because if you know how to properly leverage and make that $1 million capital, and you know how to make it work, I'll take the $1 million today because I can get my own $1,000 a month.
That's good. It's actually $1,000 a week, so let me see if I can entice you a little bit.
What'd you say?
It's $1,000 a week.
Oh, I said a day.
No, $1,000. No, I think he thought it was a month. Yeah. So
it's
it's $1,000 a week.
Yeah, I still would take $1 million today.
Yeah, he's still there.
Yeah, of course. I'm trying to entice you. See if I can persuade you differently.
I would probably do $1,000 a week.
Why? Why is that?
The reason why is because the type of person I am, I'm very optimistic. So as I learn stuff, I don't mind risking. So if anything goes wrong, I know that's a guaranteed $1,000 that's coming down that I can make a new decision, I can make a new risk with in the future. I mean, I believe I could make some investments. I got connections to utilize the $1 million, but just in case things go wrong that I didn't foresee, as I'm learning things in my development, I know that guaranteed $1,000 gonna be there.
Yes, sir.
See, that's see, I told y'all the partnership. They got the partner. They both had different answers.
I love it.
So that's why they meshed though.
Yes, sir.
Cool. So then, you got it.
So question number 4: if you can go back and change anything about your journey, what would it be?
Actually nothing, because I feel like at every level there are harder lessons to develop you and grow you. And I feel like up until this point, I don't think that God does anything or allows anything by happenstance.
If everything went right, you wouldn't learn any lessons. And so for me, I wouldn't change anything because at every mistake or success I've had, I've learned something that was needed for the next level.
That's good, man.
If I would change anything, it would have to be listening to God the first time when I get a lesson. So whenever he presents a lesson and he presents something for me to fix or grow with, really look at it, stop and really see how I can apply it for the next level that you're going in. The reason I say that is because all of us is going to experience some type of lesson or something that has been shown. So it's going to be different for everybody. So I just encourage people to, when you get that lesson, don't ignore it. Even when times are good, don't ignore the lesson that you have been that you was allowed to see in the past, or the lesson will come back.
I love it. I love it. So last question, where can people find out more about y'all?
You can find out about me, Jake Taylor Jacobs, on all platforms, JAKETAYLER JACOBS, and bizcodebuilder.io.
And you can follow me at Brother Ben X on everything, and go to brotherbenx.com to see the programs, the books, the links, and things of that nature. brotherbenx.com.
Yes, sir. Yes, sir. Y'all heard it here first. Man, this has been absolutely amazing. This has been a fantastic episode. So many gems dropped. So many things that the people can, listen on and take action on, man. We appreciate y'all so much for, coming onto our show and allowing us to come into y'all space. Definitely, and, record here too, because this is absolutely amazing space. Got a little toasty in here, but it's, it's all good.
Yeah.
So, but we appreciate y'all.
No, we definitely appreciate this, man, especially short notice. It was a pleasure to have y'all here today.
Appreciate that, bro.
You've been listening to the Money Monopolizers podcast, helping you take control of your financial destiny. To learn more about how you can be in control of your money, visit moneymonopolizers.com. We'll catch you next time when Alex and Marlon share more personal finance and wealth creation tips with you. Now it's time to take action.